Hello. Good morning, good afternoon, and good evening to everyone who's joining this webinar. We're going to give 30 seconds to people to join the link, and we'll be starting in very, very shortly. I think we're 1 minute past, and I can see quite a lot of you have already joined. So in the interest of time, we're going to kick off a packed agenda, very interesting conversation. Thank you everyone once again for joining this webinar, which is part of the Financial Crime Compliance Spotlight series. And today we're going to talk about instant payments. And all about the challenges and the opportunities that instant payments bring. I would like to briefly introduce myself. My name is Teodora Kristova, and I'm going to be your host. As a way of introduction, I started my career in investment banking, having focused on mergers and acquisitions. And then later on in 2011, following the financial crisis and a flurry of new regulation that was implemented at the time, I moved on to an exciting governance, risk and compliance space, joining the financial and risk division of Thomson Reuters back in the days, now London Stock Exchange. At London Stock Exchange, I head up the global strategic partnerships, and I work closely with technology providers to deliver an integrated and more complete solutions to our customers and help them identify and prevent financial crime. I'm very excited to introduce you to Pascal Ahrens, who is the co-founder and chief product officer at Neterium. Pascal, would you kindly introduce yourself?
Yeah, sure. Short introduction. So I've been working in the financial industry for 30 years now, but more than 30 years actually. Started in the more in stock exchanges and derivative exchanges in the beginning. By training, I'm a software engineer, although I have not written a line of code since a very, very long time. So I'm more a product person these days. And after 20 years in sanction screening technology, I have started, co-founded with Thomas Gilbert, co-founded Neterium back in 2017. So that's already quite a few years ago. And happy to be here. Just one point that's very important, I think, Teodora, is that the spotlight is on instant payments, but it's on obviously from the FCC angle. So I don't pretend to be a payment expert. I know just enough to be dangerous on that subject, but I think that I know a lot about the challenges that this brings, that instant payments brings from the FCC angle.
Thank you for that introduction and clarification, Pascal. I also meant to share with the audience, we're not legal experts. We don't provide legal opinions. So we're here to share our insights and our knowledge with the audience, and hopefully to dive into some practical insights and guidances as to what our audience can leverage in their day-to-day practice. So a few housekeeping rules. You can submit questions in the Q&A function, Q&A chat, and then we will pick this up towards the end of this webinar.
by the way, but despite all these disclaimers, please stay. It's going to be interesting anyway. So.
Absolutely. I'm really excited to dive into the topic of instant payments. So payments as an ecosystem seems to be in constant evolution, and the sector has been undergoing a huge disruption for the past 20 years. So not only we're witnessing alternative methods of payments, but also real-time payments are soaring in certain parts of the world. Others are following, as you will, we are hoping to discuss in more details later. But in combination, there is an ongoing standardization happening in the sector, which basically creates a perfect storm for the next stage and the evolution of payments. So payments are obviously very important. They're the backbone of our economic system. They support growth, they support digital economies, and they're driving innovation. So when we talk about instant payments, we cannot sort of start discussing this without mentioning sort of what is actually, can we start basically take a step back and start from transaction screening? How is it different or very different from name screening? Pascal, if you can pick up this first question, and what is the difference between payments versus name screening?
Yeah, it's a question that we often have because people tend to say that screening is screening, and also a lot of people tend to mix up or and to think that screening names is name matching, and screening payments or transactions is also name matching. So actually, what's important to always remember is that while screening names or screening customers is very closely associated to name matching, in the case of transactions, it is very different. Why? Because there is if you take a transaction, and so a payment is a type of transaction, there is much more than names that can be found there. So in terms of the semantics of what's inside the transaction, it's very different to screen a name and to screen a transaction. So basically, there will be names in transaction, but transaction is much more, because in transactions you have a lot of information about the transaction itself. You have, obviously amounts and things like that, but you also have a lot of codes, a lot of information like instructions that are very specific to transactions. And it's very important also to understand that although you would expect that any automated way of transmitting information would be heavily structured, as most of the people in the payment space know, payments are very loosely or sometimes not at all structured. So there is a lot of complexities there that you have when you screen transactions compared to names. It's much more complicated. The second thing is that you have to understand the semantics of not one format, but a plethora of formats. We are going to speak a lot about later on about ISO 20022 and how there is a convergence. One of the reasons of this convergence is precisely that today the landscape is very complex, and that is very difficult to pass from one format to another. So, but the reality today is that there are a lot of different ways of expressing the same information, and that means that in terms of screening, the way that you need to configure a lot of things to be able to get the information from the right place. So where is this information located inside of my payment is an additional complexity. Then, of course, you have the regulatory aspect, which is also very different. I mean, if you look at it's not a mystery, all the huge, very big fines that has been imposed in the sanction domain. the very, very big amounts, when you are in the billions, it's very much linked to transactions. And that, of course, is understandable. While it is also more difficult to screen a transaction, is that you only have one chance to stop it. So from a regulatory aspect, the risk is very high, because if you don't stop the payment, well, it's too late, it's gone, and then there's nothing that you can do in order to get that back. So for all these reasons, the risk appetite of financial institutions for transaction screening is quite different from name matching. It's really close to zero. It's obviously a lot more. It's a lot safer to block the payment, even if it were not always necessary, than to let it go and then to be sorry. So better to be safe than sorry in that case, which of course clashes a bit with the technology aspect of transactions, where we try always to achieve maximum efficiency, because we don't want to generate a lot of false positives that then plague the analyst team. But on the other hand, the risk appetite for this regulatory reason is really, really low on transaction screening. Then of course you have all the other aspects, like everything which is related to geolocation, so everything which is related to locations inside of payments, especially nowadays with all this focus on export control, sanctions, circumventions, and so on. Everything which is related to locations inside of a payment is extremely important, and that's something that you don't have in name screening. And then last but certainly but not least, you have also everything which is related to the throughput, to the speed that you need to act. The big difference, I would say, between name screening and transaction screening is certainly on the real-time aspect. Because in the case of a transaction, that transaction is blocked. So it is somewhere in a system that tries to send it, and it's waiting for that screening result to come back to say, okay, it's okay, you can send that transaction. So it's really, really real time. Of course, this aspect is even more important for instant payments, because when you have 10 seconds to process the payment from end to end, of course, you have extremely extremely small time to actually react in terms of sanctions. So, sanction screening. So all these aspects. So the real-time aspect is certainly one of the most important one in two dimensions. The first one is the throughput itself. So you have to be able to process peaks. Because typically you can have a lot of transactions and then less transactions and then again peaks of transactions. So you have to be able to handle very quickly very big volumes. But also there is a question of latency. So latency is really how fast your system is going to react, and that in terms of instant payments is extremely important, because if you say that your total time is 10 seconds, in that you have maybe 1 second to generate the payment itself. Inside of that second, if you zoom in on that 1,000 milliseconds, how many milliseconds do you have to screen? Probably just a few milliseconds. So it needs to react extremely quickly, and that this latency aspect is extremely important. So you can see if you think about all these constraints, well, name screening looks extremely relaxed next to. I know it's not true, but compared to transaction screening, name screening seems not easy, but more relaxed actually. And then of course you have the data aspect. Of course, I think that's more you on your side. Yes. But the data aspect is that on the name side, well, you have all these large data blocks, but of course on here we are more about sanctions, but doesn't mean that it's easy.
Yeah, I couldn't agree more with you. Obviously, name screening requires a lot of data in combination, so not only sanctions, regulatory, law enforcement lists, but also politically exposed persons data, adverse media, structured and non-structured. For payment screening, and particularly instant payments, you're obviously shrinking that benchmarking data set to pretty much sanctions only. And even though it seems like, oh, I have an obligation to screen only against a few lists, so it may sound simpler. However, in evolving sanctions landscape, really what our customers are telling us and what they need is that they need really high quality, deduplicated data that is delivered fast to them. And obviously they need data that is not purely sort of scraped from official watch list websites, but they need data that is enriched with secondary identifiers to really help them have a much more targeted screening and obviously to reduce noise. Just like you said, Pascal, I think time is really a luxury here. So with payment screening, instant payments, we don't have time. So our customers really have to react quickly, all the banks, all the payment service providers instantly. So they need mature data that they can rely on, that can help them meet those increased regulatory requirements that we're going to talk about in very, very shortly. But from WorldCheck perspective, which is the leading risk intelligence database on the market, I can just share a few words around sanctions, and this is our absolutely top priority. We pay special attention to sanctions. We have specialist teams that monitor those sanctions on sort of 24/7, 365 days in the year. So it's really, there is no weekends, no downtime for these teams. They're proactively monitoring everything that's happening and all of the updates that are taking place. And we also have external certification, which evaluates on an annual basis the design effectiveness of our processes. So that's from sort of process perspective, but I also want to mention what is very important here for payment screening. Obviously, explicit sanctions is what we all know and we already talk about, and it's kind of much more easier to track and download from OFAC, HMT, UN, EU lists, and so on. But where the situation with sanctions gets really gray and murky is really around implicit sanctions. So this is really the challenge, where sanctions apply to entities that are not sanctioned by name, but they're covered by narrative statement of a sanctions program that extends to an entity that is non-listed. So just to give you an example, when Ukraine and Russian conflict started back in February 2 years ago, 300 members of the Duma, which is the Russian parliament, had to be added to the lists. So not only we added those names, but also you have to look into all of the ownerships that these sanctioned individuals have. So you're going into their assets, their companies, all of this shareholding. So it's a very, very complex and very tedious and very laborious process that needs to be done with very rapid SLAs. So this is the effort that goes into putting together this mature data set to support this instant payments, real-time screening, and sanctions compliance. So really, the role of data and technology is very important because of the use of quality data, and sophisticated matching is really going to suppress all of the false positives, which for payments, it has to be done at scale.
Yeah. And I think we will come back to when we speak about the regulation, the EU regulation on instant payments, we will come back to how it's important to deliver this data on time, even more important than before.
Sure. So instant payments, I mean, it's such an exciting topic. And before we go into the details of the new legislation that was adopted within EU countries. I just wanted to provide, for the benefit of everyone who's on the call, just an overview of where is the rest of the world in terms of adopting instant payments. UK is one of the countries that has adopted instant payments for quite a number of years now. May 2008 is when UK adopted instant payments under the name of Faster Payment Service. So today, 16 years later, so I live in London, I'm based in the UK. I cannot imagine my life without using instant payments for everything, everyday life. So it seems like it's now part of our modern and sort of digital age. And other countries as well, obviously US, they have not one, but multiple instant payments rails, such as FedNow and Zelle. Australia, China, Singapore, India, Brazil are just some of the other countries that have adopted instant payments, and those are growing at really fast pace. So in the UK, for example, last year, there was 4.5 billion transactions processed, and the number of these transactions is growing really strongly, for the total value of 3.2 trillion. So it's really mind-blowing numbers, and the growth rate is 17% year on year. So the trend and the predictions is that the number of transactions that are processed via instant payments is really going to exceed the number of transactions processed via BACS. So instant payments is really going to become the largest payment channel. So from that perspective, the EU, having adopted the new legislation in February this year, seems like is following suit, having seen the success of instant payments in other countries. Seems like EU is really making a leap forward in adopting this legislation. Pascal, can you tell us a little bit more about?
I think it's interesting because the US, the UK has on that particular subject has really shown the way. There may be a bit pain that early adoption now by the fact that in terms of standards, it's harder for them to move from their legacy formats to ISO 20022 like the rest of the world. I think that faster payments is still not migrated to ISO 20022. Actually, there is no timeline for that. So, but a lot of the questions that we see happening, that we'll see happening on the EU side, are actually questions that have been addressed in the UK a long time ago. So, for example, what to do with payments that have what we call one leg out, or that are originated outside of the in this case the selling zone, or end up outside of that zone. Have they to be screened or not? How must they be screened? Well, this has been addressed some time ago. In the EU, this is still kind of the questions that the regulation has to solve. It's interesting that you say that the adoption is so great in UK, because one of the reasons why the regulations happen in Norway and Europe is that the adoption is really quite low in Europe. So I was at a conference yesterday from the Association of the Luxembourgish Banks, so where I live. And said that the adoption in Europe of instant payments is 18%, so 1/8. So that means that like 82% of payments are still traditional payments. So it's really the opposite in terms of adoption. Maybe because there are no incentives on the banking side. and regulatory push is not required, which is what is happening. But really, we see that the UK has already addressed a lot of the issues with this. Now, as I said, on the convergence of formats, where everything is migrating to ISO 20022, including CHAPS, which is the high value RTGS in the UK. Well, faster payments is not there yet. So that may be because they were one of the first systems. But okay, clearly the EU is trying to make up the time lost here.
So what does the new legislation mean, Pascal? Obviously, there are very tight timeframes. I'm just looking at the dates sort of noted. All of the banks and instant payment providers need to be able to receive payments by 9th of January 2025, which is only 8-9 months away.
It's very aggressive indeed. Yeah.
And to send instant payments by 9th of October 2025. Very aggressive timelines. And the banks are already stretched with the adoption of the standardization of the formats that you mentioned, ISO 20022. So that new legislation really brings new burden, new obligations to banks. What I mean, let's talk about sort of what are the challenges and how far are banks on their journey. What do they think? What have they shared? And how do you, and I'll share my view as well. What are the challenges? But also, is there a silver lining of all of this situation, and are there benefits for the banks as well?
Yeah, it is. The regulation took some time. I mean, the draft was introduced in 2022, so end 2022. And when the draft was presented, a lot of people actually, I mean, again, I take the FCC angle here, with conversations with banks at the time were really quite interesting, because they were looking at this as this regulation quite positively, especially because it introduced the idea that instant payment transactions should not be screened. It's like because and that was compensated by the fact that the KYC, the customer KYC, was then supposed to move to daily, and therefore the idea was to transform a bit like the whole Eurozone into some kind of closed loop system where all the participants, all the people potentially sending a transaction would have been screened at maximum 24 hours later. So therefore, the transaction itself would not be screened. So that was perceived as relatively positively by all banks. And then of course, there were questions left like, okay, am I going to take the risk not screening these transactions for OFAC? But I mean, globally, it was perceived positively. And of course, when the actual regulation came out, interesting other thing is that there was a provision, I think it was 5.5. There was a small provision in the draft regulation that said something which made sense in that context, which was if a correspondent of someone of a bank that gets the payment ended up being fined because of lack of a miss in screening, typically KYC screening, from the sender bank. I mean, from the sender PSP actually. Not just bank. Well, that PFP would be responsible for this and would actually cover these costs. And so that provision was subsequently removed from the final regulation. So that's an interesting thing that to see what is to compare the draft and the final regulation, so you can actually see what has been amended. The other thing that was amended and that was really very different was that the not screening provision was reduced to actually not screening the EU list. But then two things. That means that that the scope was then reduced. I mean, you should not screen these payments with the European list. But first of all, a lot of countries like France, Belgium, would also impose to screen with the national list, which is often very similar to the EU list, but it's a different list. And so, for example, in France, it's not because you should not screen with the EU list that you don't have to screen with the French list. So that list is anyway there. So that means that you have to screen anyway. So that this, and then of course, a lot of banks today don't have the risk appetite to not screen for OFAC. A lot of banks have had or are still in DPS with the US authorities, and therefore they prefer not to take risks there and to say, okay, let's take a risk-based approach and still screen with OFAC. So if you say if you move from I don't screen with any list to okay, you don't have to screen with the EU list, but you still have to screen with other lists. Then the process of screening is there anyway. So the gain is, I would say, less than it was hoped. But then, of course, the other aspects, which are the additional constraints, so screening, KYC screening every day. These were maintained in the final regulation. So it means that the end situation is a bit worse than it was before. So you cannot screen with EU, but you still have to screen transactions. But on the other hand, KYC screening now has to be daily, and that for a lot of banks is actually a challenge because it's a huge process. And just from a list perspective, I'm sure you have a perspective on that. Just from a list update perspective, it is complicated, and not only because the EU itself is not an example in terms of providing the digital list in a timely manner. Yeah. So actually, you have that part has to be added, and then you have the whole aspect of verification of payee. So in UK, I think you say confirmation of payee.
Confirmation of payee. Yeah.
I guess that we found that a bit constraining. So in terms of terms, we use verification of payee in the EU, but that's added also. So basically, there are more elements to be added there. And of course, in terms of challenges of screening, as I said, in terms of speed, well, you have to react extremely quickly, and also by definition, if your end-to-end time to process transaction is 10 seconds, it's impossible to have human in the loop. So it means that whatever happens as soon as there is a match, that basically disqualifies this payment from the instant payment SLA. So that's certainly a lot of things that actually make this regulation not so positive as banks had hoped. And then of course it was hoped that, I mean, it was thought also, we thought at that time, because we spoke with compliance, that at least payment teams would be happy with it, but then even payment teams now are also constrained by this, because they have this additional constraints there with daily KYC and so on. So it actually nobody is really as happy as it looks. It was actually interesting that in the conference where I was yesterday, where the subject was a deep dive on instant payments, the very first statement of the Association of the Banks was, "We are not here to discuss the interpretation of the EU regulation. That was the very first thing. So it's like, okay, so basically it was what they meant was like, okay, we will not be addressing the elephant in the room. And that will be addressed by the EU Commission itself later on. So so basically, not a lot of people think that this regulation is as positive as it could have been.
I agree with you, and obviously the intention initially, it seemed like with the sort of the first iteration of the legislation seemed like that it's seeking to reduce that frequent friction when you screen every transaction, right? So moving to KYC, which is seeking to remove that sort of volume, and instead of screening every transaction, if you have pre-screened customers that are interacting with each other, then that was the understanding that that's going to remove certain volume and burden. But it looks like that it's not, because it only alleviates sort of very small part of the whole workload, and it adds a whole lot of a new one, because a lot of the banks that actually we speak to still have a lot of sort of batch processes happening. So they're either screening their clients periodically or weekly, so whatever frequency they deem appropriate, or event-driven screening. So moving that and shifting that screening to daily screening, daily KYC, this is going to add a lot of pressure and resources on the banks that are even more stretched now with the implementation of ISO 20022. So thinking from sort of the pain points that the banks are going to be experiencing, what we hear is that it's really the tech stacks of the banks that are not prepared to take this new evolution of payments. And basically banks are facing an uphill battle towards instant payments, because they have all of the fintechs and neobanks that don't have the legacy of existing tech stacks. Obviously, they have made it easier to transfer money cross border and reduce that time frame from 3 days to 1 day. So it's really putting a lot of pressure on the traditional banks to fulfill those instant payments and be compliant and verify the payee. So it's a lot, and mainly it's going to be around the bank and its internal processes, whether they have operational capability and capacity. How do they? What is their speed to compliance? Are they agile enough to really embrace the next challenge, which is instant payments? And what you mentioned earlier around updates and how quickly those sanctions updates are implemented and integrated into the production environment of those banks, I couldn't agree more. So due to this regulatory pressure, more than ever, customers will need sanctions data delivered as soon as possible. And different businesses operate in different ways, even within the same organization. But the regulatory landscape changes in real time. So customers really need to be able to download those lists and interact with them as soon as they're published. So a new delivery method is required with data updates available on demand to really get into the bank system as soon as possible. So that fast sanction delivery for transaction screening and daily KYC is super, super important.
Yeah, they are, in fact, it is kind of a running joke in the compliance space that when the EU list is updated, you particularly the EU list, you know that the EU list is supposed to be enforced at the date of the publishing of the list. So basically, if the list is issued on the 16th at 4 p.m., the enforcement date is actually the 16th at 0 hours. So basically, you should have been implementing it before it's even available. So it's kind of a joke that we always tell, but then of course it takes this joke takes a new dimension with instant payments, because indeed you are supposed to have screened your customers every day, and that's going to be the challenge there, is that you also know that having the list available in electronic format is not the same as the list published in the official journal. So there have already been cases where there were major differences for a certain period of time. So that I think that makes, of course, the role of organizations like LSEG extremely important, because they have to cover these kind of gaps and provide the data as soon as possible. And you are right about new delivery mechanisms. It's very clear that there is a demand from technology side now to have new delivery mechanisms that are not batch lists that come through an FTP or an HTTP link, and that are a big zip file that have to be unzipped and then loaded into a system. I mean, this is systems how they worked in 10 years ago, but definitely today there is a demand for better delivery mechanisms.
And I would also like to touch base on ISO 20022 Pascal, and the interconnection with real-time payments. Can you share with us a little bit more about the evolution of this regulation, how it's going to impact banking clients?
Yeah, well, it's I think that so you see a global and it's not just EU, of course, and it's not only SWIFT or other things that are very visible in ISO 20022. I think there is a global convergence. I think that from the FCC angle, the ISO 20022 migration of SWIFT, or the CBPR plus context, was presented in a lot of conferences about AML or screening or financial conferences as a way to better structure transactions, and hence have a more efficient screenning, because everyone is plagued by the false positives, and everyone would like screening to be better, and obviously data quality and structuration is extremely important in that domain. So everybody was certainly happy to have a solution to that by introduction of ISO 20022. Now, what we see, so it was introduced in the SWIFT context. It was introduced in March last year, so we have a bit more than a year now in terms of experience. And what we see now is that it's quite disappointing on that particular aspect, because a lot of the transactions today are still transactions which are translated from the original PIN format, and therefore they don't fully exploit the structuration of ISO 20022. So it means that they don't yield better results in terms of screening. There is a bit of improvement possible with addresses that will be available soon. One of the reasons today is that in the CBPR Plus format, when you specify the address, or you can specify it either completely unstructured, like it used to be in the past, or you can specify it completely structured, which barely anyone can, because you need to have all the data already structured. But there is no choice, no intermediary choice. That's going to be added. There is going to be a new hybrid format that's going to mix these two. So that maybe will bring an improvement. But otherwise, for the moment, we still see a hybrid situation where most of the ISO messages are actually previous screen messages, unstructured, that are just copied in the new format. So it's the focus for the moment is more on being compatible or compliant with the new format, and not improve the quality of data. So on that point, I think that there is still improvement to be done. I think that an aspect that which is not and that which is linked actually to instant payments is that it improves actually transparency. That was not so much advertised in the FCC space, but actually it is an important aspect from ISO 20022. So, for example, for instant payments, which are one leg out, so which come outside of the EU zone or go outside of the EU zone, end up outside of the EU zone, there are no fields like instructing bank where you can add the information of the final destination or of the original sender. And so that improves, and this field just didn't exist in the formats before. So that was information that was lost, and that's important for FCC because in terms of screening, it's really important with that information. So it improves transparency. So that's an aspect of ISO 20022 that was really not so much advertised, but I think that is really achieved. And then another aspect, of course, is that I think that one of the big reasons is of adopting ISO is interoperability, between the different CSMs, because you have, as you have very well mentioned, I mean, instant payments are available a bit everywhere, and all these different systems they aim to be potentially interconnected later on. So the interoperability is extremely important. And then, of course, for that, all going to the same format is certainly something that's going to help. And we hope that when the format will be, fully implemented everywhere, and all technology stacks will have changed, and that means all the systems from, the one sending the payment, from the one originating the payment, and all this chain of systems in the operational flow that generate the information. When they will all be updated, we hope to have a lot better quality in terms of eventually a lot better quality in terms of what we get. And then, of course, that will have a quite significant impact on the quality of screening and the quality of alerts that we are sure of. We see that already for the messages, that the small portion that we get for the moment, and that is already structured.
So very interesting point about the lost fields and sort of improvements and additional level of transparency this new structure is hopefully going to give us. Obviously, the data perspective there is that all of those additional fields, if they're structured against granular and high quality data, then this should really improve the screening results and the quality of the output of the results. So this is where really a mature database comes in as a sort of benchmarking standard, because of that granularity. And I'm speaking from WorldCheck perspective, but it's really the granularity and how the data is taxonomized and grouped into keywords that can be used for efficient screening, but also all of the research and man hours that go into enriching the data with secondary identifiers to really allow for that precise screening, targeted compliance programs, and ultimately less false positives, better screening results. So because we're talking about instant payments, sanction screening, I wanted to sort of take the opportunity to really speak a little bit about the increased scope and velocity of sanctions, which I believe is very relevant here. So our regulatory environment is constantly evolving. There is really a rapid change in terms of number of lists and the additions to those lists and the scope of sanctions compliance. And I'm going to ask my colleagues to put on the screen a slide which talks about the Global Sanctions Index, which we using WorldCheck data. In May 2022, we launched under the name of Global Sanctions Index. So the purpose of the index really is to deliver a systematic and quantitative measurement of how many unique deduplicated individuals and entities have been sanctioned globally over time. So you can see a very interesting graph, obviously starting at January 2017, which is when the graph is leveled to 100. Basically, what we can see as of today is that there is hyperinflation because the inflation is running super hot at 16% as of March 2024. There are currently around 70,000 individuals and entities that are now sanctioned globally. And since January 2017, the number of sanctioned persons has increased by around 370%, which is astronomical amount of additions to sanctions lists. So while many sanctions programs have been driven by the conflict in Russia and Ukraine, the sanction inflation itself is a long-standing trend. It's a persistent trend. It's something that we see for many, many years. And what this hyperinflation and this rapid change in sanctions is leading to increased overall sanctions risk and higher complexity. So this is what our customers are dealing with on a daily basis, which obviously is increasing also the cost of compliance because of the higher screening match rates and false positives, more regular, more extensive enhanced due diligence required, need for more experienced and probably external staff as well. There is conflicts in laws and different situations that have to be interpreted. So really that places a great emphasis on data quality and how mature, how robust is the benchmarking data that you're using. So with instant payments being real time and 24/7 service, there is even more dependency on timely sanctions updates. No weekends, no holidays, no downtime. So from technology perspective, the need for solutions that update without downtime is going to be super important as well and always available. So can we sort of shift the topic and talk about this sort of from technology perspective? What is the demand? What are the priorities and the solutions that customers need to consider, and any sort of practical insights and considerations for our customers and the people in the audience? I'm going to hand it over to you, Pascal, and then I'm hoping to comment as well.
I definitely hope you will comment also. Yeah, actually, what we see, and I think it's a question in the banks today. The fact that moving to instant payments, it's one of the big changes, and why it's so hard to move this technology stack is that service has to be available 24/7. It's really key in terms of that service. And today it's not the case. Okay, so today a lot of things have that are closed after business hours, are closed on weekends, are closed in the evening, and so therefore it means that the list updates of the sanction screening systems, for example, are following that kind of cycle too, where they the lists are downloaded, then the system is shut down, is updated, and then is started again. What is needed now, and that's one of the reasons why banks are now running to update a lot of things before that January and October deadline, is that all these systems will have to be available 24/7. So at any time you can get a transaction to be screened. Now that we know that they will have to be screened anyway, even if it's not with the EU list but with other lists. And at any point in real time, you have to be sure that you are going to screen that transaction with the right version of the list. And it's not because you are updating your transaction screening system with the new version of the list, or even with the new version of the software, that it can be unavailable. It needs to be available all the time. So that's a very big constraint that is now added to because of this.
There's a comment in the chat that I've picked up. Obviously, with the introduction of the new regulation, it prohibits banks to charge more for the for instant payments than the traditional SEPA credit transfers. So it looks like the banks are not going to be able to generate extra a new source of revenue for them. So they will have to finance all of this compliance with the new legislation from their own budgets. In terms of silver lining, and are there any positives and benefits from instant payments and this new regulation? So personally, I think that this is a great move and really great news for all the consumers and for businesses as well, because I read in some of the stats of the EU are saying that at any point of time there is 200 billion euro which are blocked somewhere in the system. So if that capital can be freed up, and if that working capital can reach its destination, and it can be sort of fueling growth for small businesses and for other sort of corporates, that's really good news. And for all of us as end clients and consumers, this is also very, it's obviously bringing a lot of convenience and really good news. So this is all positive. Obviously, just like any new challenge, it's going to be how you embrace that challenge. Do you jump on that train in order to sort of meet those regulations, and further down the line, there is probably a room for banks to expand their services and provide banking as a service and launch new activities where they sponsor smaller, less sophisticated payment service providers. So there are benefits, and hopefully they will outweigh the burden that's coming from this new legislation. So that's my personal view. Pascal, what do you think is the future?
I see that we have 1 minute left, so it's going to be a short future. It's like, well, I think that in the conference yesterday, there were 2 points that were made by banks about that. The first one is, yes, there is no direct revenue from this instant payment move, so it needs a regulatory push. So they were agreeing that the regulatory push was needed. And the second thing is that they said maybe over time, they hope that when everything is moved to instant, that the silver line, like you say, might come from the fact that some of the transactions move from credit card to direct debit. So basically, that was probably where the revenue could come from for the banks. But that was the comments yesterday at the conference.
Very interesting. And I also saw some really interesting news the other day from Uber, who are really advertising a new service, which is pay by bank instead of pay by card. Obviously, this is in line with what you just said. There's going to be probably balance of power and shift of transactions from card payments to wire payments and direct debits. So the disruption continues. The space continues to be ever so exciting. So thank you very much for this interesting discussion, Pascal. Thank you everyone for joining the webinar. I really hope that you've managed to derive some examples and practical guidances as to what the challenges, what the opportunities are related to this legislation. We will answer all of the questions that have been coming through the chat separately, and we will follow up in a blog follow-up. Thank you very much. Enjoy the rest of your day.